Hello traders, Gary Wagner here. Just before 11:30 in Honolulu, 5:30 in New York. It is Monday, October 29th, 2018, and this is the Daily Report for gold and silver. Although gold is trading off of the lows today, it is currently down $4.60 at $1231.20. The low today was $1226.10, and that is extremely noteworthy. It will be a focus of our discussion as we pull up our technical studies. Silver also losing ground, a pretty sizable drawdown, 1.63%. 24 cents in terms of the drop, and it is currently fixed at $14.46. Platinum, the only precious metal to gain, gaining fractionally 70 cents at $8.35, and palladium selling off by about $10 today, closing at $1,075.50. Now, there were headwinds with a stronger U.S. dollar today, up about 1/3%, currently at 96.44. But traders, the key, without a question of a doubt, is a major meltdown once again in U.S. equities. The Dow had a 900-point swing today. It closed down 245 points after being over 500 points lower and 345 points higher on the day, closing at 24,492. S&Ps also lost about a percentage, closing at 2639, but the big drawdown was in the NASDAQ composite, losing well over 1.5%, closing at 7,050. Traders, no doubt we are looking at lower pricing almost across the board in the precious metals complex. Gold losing about 1/3%, almost $5 in terms of the drawdown today. But what is noteworthy and important to me is the low of the day, because the low today came in at $1226.10. This red line right here, this red line represents the 100-day moving average. And as we've talked about throughout the last week, there were a couple of milestones that this market hit. The first milestone, of course, was when it broke above 1,200, as well as the short-term 50-day moving average. And that was kind of a technical signal that the market had broke out of the bearish tendency that had been so prevalent and moved into a short-term bull market rally. Now, the rally has been subtle. It has been minute in terms of the dynamics of price change, but it has been moving to higher ground. Now, last week we talked about the fact that there was a key distinction from the previous week before that, because 2 weeks ago we saw that this 100-day moving average was simply an area in which price was challenged really on a consecutive and daily basis, and that of course was up till last week Tuesday. Monday, of course, the market opened a little bit above it but then closed below it. But we have Tuesday, Wednesday, Thursday, and Friday, and this being today's Monday's candle. We saw that on Tuesday, the market really had a substantial clip over a $10 move to the upside and effectively not only traded but closed above the 100-day moving average, really for the first time in quite some time. Then throughout the entire trading week, although the moves were fractional, nominal, they all remained above the 100-day moving average. Not only the lows, but the open, close, as well as the high. Of course, it would have to be the low first. Now, today, the market opened up about mid-range above the 100-day moving average. At some point during the trading day, it did trade below it, but it managed to close just above it at 1231.20. We are long from 1227 and change. We have a stop that is sitting at 1216.13, and we're basing that on the moving average itself. And so at this point, what we're going to look to do this week is to trail that stop up behind the moving average, and this time behind the 100-day moving average. And I'm kind of looking at the 1220 area as the best possible point to move our stop to. And the reason that I'll be picking this particular location over the next couple of days is that we have not gone below the 100 day moving average now in well over a week. It's only Monday, so we'll have to see if this trend continues. Also, based upon the fundamentals that are in play in the market, we know that if the trade war between the United States and China heats up, ramps to the next level, which has been purported to be a high probability in it actualizing that way, then we should see, and I underline the word should, we should see gold safe havens aspect really come into play. It is for that reason, traders, that my recommendation is to maintain our current long position, maintain our current stop, and we will look to trail that stop up higher later on this week. And traders, as far as silver goes, silver is sitting at $14.46, down 1.63%, a pretty dramatic drop in a single day. But the most important characteristics is pretty much the opposite of what we're looking at in gold. The blue line here represents our 50-day, our short-term moving average. Now realize in gold has moved up not only above the 50-day, but the 100-day moving average. 100-day on this chart is in red right here. In the case of silver, pricing is broken below the 200, below the 100, and today back below the 50-day moving average. And that to me is extremely bearish and signals that silver could be entering a longer-term bearish trend. We know that the trend itself has been negative, but the fact that it is below all three moving averages, to me, is foreboding. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.